war. So actually, just to get everyone up to speed kasi, di ba there's escalating trade tensions between the United States and China, among other countries. Tapos, it's significantly impacting the global financial markets. And actually, as a matter of fact, yung US, nagbato siya ng 10% tariffs baseline on everyone. Tapos, 54% higher or 54% on China, 20% on Europe, tapos 46% on Vietnam. Tapos nagalit naman si China, retaliated with 34% tariffs back to the US. And US increasing the tariffs to China naman by 100%. So now, just yesterday actually, funny thing happened, sobrang crazy. Trump said na, okay, we're gonna pause this 90-day pause for the tariffs for everyone. And so boom, stock market went up by 10% just yesterday, last night lang. So actually, a lot of this has been going on, right? How would this affect both the US market and the Philippine stock market moving forward? Bottom na kaya to? What do you think, Sir John?
Yeah, grabe. As I mentioned earlier, we couldn't have scripted it any better, right? Very serendipitous time to have an usapang mercado. The markets were spiraling out of control owing to the punitive tariffs announced on April 2. So one investment banking sell side firm after another were actually cutting their forecast for both the economy and the global indices. Then last night, as you mentioned, Aaron, Trump pivoted and the market just exhaled a sigh of relief, diba? And I think the global markets and the economy definitely averted the worst case scenario yesterday. Although people were speculating all along that this was really part of Trump's negotiating posture, until you actually hear the pronouncement, you can never be too sure. But is it the bottom? You can never really say if a bottom is the ultimate bottom, but it is definitely a bottom. And whether you are a trader or an investor, this is the juncture in the market that you actually have to make a play. Whether this is the point at which you actually, as an investor, you want to add to your investment, and as a trader, this is actually one of those potential inflection points that you want to play.
Okay, so just a follow-up question, Sir John. All right, so given, for example, what if Trump goes back with his words again and then he says na, oh, trade war still continues, no? Actually, there's an opinion on this one. Next slide, please. Next slide again. One more, next slide. Right. So actually, there's an opinion by our very own special assistant to the president for investment and economic affairs. So si Secretary Frederick Go, he said on Thursday na wala to, this trade war won't even affect the Philippines. As a matter of fact, it's actually beneficial kasi companies would set up their factories here in the Philippines na lang daw. Kasi relatively, we have less tariffs imposed on us. Do you agree on this take, Sir John?
So I agree in the sense that the Philippines is more insulated because we are a very consumption-based, domestically driven economy. But I do not agree that just because we were levied a lower tariff rates relative to our ASEAN counterparts, that all of a sudden we will become a manufacturing haven, right? Because this has happened before. Look what happened in the first iteration of the trade war. In 2018, Trump was really focused just on China, and he levied the 25% tariffs on China. So what did the US manufacturers such as Lululemon, Nike, Restoration Hardware, what did they do? They all moved their supply chain to Vietnam. Then all of a sudden, Vietnam was imposed a very high punitive tariff rate, right? So if you're a CEO of a company, you're gonna want to see long-term enduring trends as opposed to just a knee-jerk reaction to the pronouncement of Donald Trump, because all of a sudden you're going to spend billions of dollars moving your supply chain, let's say, for example, from Thailand or Vietnam or Mexico to the Philippines, just to find out that later on, uh, the rules of the road changes again, and then he pivots on his tariffs pronouncement. So it's not as simple as that. Secondly, the Philippines, we actually don't have the infrastructure in place to really do manufacturing at scale. Like this has been discussed ad nauseum, wherein we have the second highest electricity prices in the world, and the cost of doing business because of bureaucracy and corruption is very, very high. So maybe if you add all those together and add it to the previously announced 17%, which no longer stands, in the end, we might just be as high in terms of cost of manufacturing versus a Thailand or a Vietnam, right?
Exactly. So what I'm getting at from what you're saying is that it's very hard for these companies to make $1 billion decision just for the fact na I mean it's still uncertain the trade war and the policies of Trump with his tariffs. It's still very uncertain. So it would be very hard for them to make a move right now. But
Actually, Aaron, if I may add, just want to add another thing. Like, even though he ano, 'di ba, nagpivot si Trump, right? Ostensibly nagpivot siya, right? The damage has been done because if you're a corporate CEO right now, would you actually go through with your capital expenditure plans, given that he can change his mind at any point in time? At the same time, actually, even let's say we stick with the 10% universal tariff for all, that's still way higher than 2.5%, which was the average tariff rate of the US prior to the escalation of the Trump trade war.
right. And just as a last follow-up question now, Sir John, just this afternoon we are talking about how different this major drawdown in the US market, how it's different compared to 2008 to all other very deep sell-off back in 2008 dot-com bust. Could you please tell our audience how this one is different? Like, meron ba itong mas longer lasting effects sa ating market?
Yeah, actually, that's a great point. So I've experienced the Asian financial crisis, the dot-com bust, the great financial recession of 2008, Brexit, COVID, and the hyperinflationary environment of 2022. This was actually the scariest one for me. And the reason I say that, if you look at COVID, right, as scary as it was, it's considered what people call an exogenous event. An exogenous event is something wherein the effects disappear after yung parang it's very acute at the start, yung impact, but then it disappears right away after you had the vaccines, the world opened up and it was business as usual again. But this one was very different. I was listening the other day to Professor Damadoran. So Professor Damadoran is actually the president of NYU Stern. So he's considered one of the gurus of valuation. He's actually called the dean of valuation. And he was saying the difference between this tariff war versus the other crisis that we've encountered in the past. The other ones that we encountered, even the great financial recession, the acuteness of the impact, that the negative impacts, it actually lessens over time, whereas this one can stay and be prolonged in nature because it's actually going to shrink global trade and reorder global trade, wherein you actually have onshoring, tapos you take away the scale benefits of core competencies, diba? The comparative advantage that happens with a very fluid global trade environment. So he was of the opinion that this could actually shrink the size of the global trading economy. So this was actually very, very concerning.
Yeah. So
Okay.
basically, change in growth for the global economy that's already
Yes.
bearish, right?
Fundamental shift. It's a true fundamental shift as opposed to a temporary constraint on the global economy.